Situation, or I want a position where everyone is going to be done with this course, you could identify what okay, so let me say this quickly. There's a difference between knowing about something and knowing something. A lot of people know about trading. A lot of people know about the fundamentals and basics of trading, but not many people truly know trading. Okay, they have a relationship with what is known. Okay, so and the reason is it's all tied to how our perception of learning. Okay, many people's ideology of learning or their introduction to learning is faltered from the beginning. It's all tied to ignorance, and because of that, they don't get into the relationship. Hence, they don't complete learning. Many people don't complete learning, so they stop at the stage of about. So I can tell many of you've gone through the stages of this training, and what you do know is you know about market structure. And that is what I can give to you. I can only leave you at the stage of about. Okay. The stage of in internal learning has to come from personal intention to experience that which is learned. Okay, this information that I've shared with you, or every training that I've given to you, is to know about. Okay, what is the market about? What is the structure about? What is the formation of distribution? Okay, everything is to give you the details. Okay, formal introduction to what it takes to understand the market. Understanding has to do with experience. So, but I want to make sure I do a perfect job when it comes to the about phase. Okay, when you know about the person, you can begin to study a person. And when you study a person, it goes into intention. So you have to intentionalize your study to be known, to build a relationship. It's from your relationship that knowledge comes. Okay. So part of the things I'll do is I may share with you part of my relationship. Doesn't mean I'm teaching you. Okay, because I can't teach you my relationship. Okay, I can only share with you what my relationship has brought me into when it comes to. So we went through, a couple of intentional or phase of training, and I'm just going to overview this phase so that you can identify each building blocks of market structure from a start to finish. Okay, so this is kind of like a review and overview, and I'm going to be doing. I'll be doing it with. It's going to be very fast. So because sometimes because we don't complete learning, what you learned 3 weeks ago, some of you may not even remember what it means today or what it's going to mean in the market when Monday is open. Okay, but repetition or the intention is just bring what you're doing. You repeat it every day. That is you. When you repeat it every day, it becomes known, but you have to first come with the blocks of identification. When we started this course, this is one of the things that I showed you guys. When we started this whole course, I gave you guys an outline, okay? And I told you guys this outline is going to tell us the importance of market structure. It's going to introduce us, and I introduced you guys into market structure, starting with the behavior of the market from bullish, to bearish. I told us about, market structure is formed when the market is trending. So we talk about the market on trend, which is bullish and bearish. Then we actually went into the details of the characteristics of bullish market structure, which entails, lows, high, swing low, swing high, and I actually brought a detailed knowledge on when does the market start and when does the market form. Okay. Then we went into the breakout structure, all of the characteristics from breakout structure to internal structure to swing high, swing lows, change of character, trend reversal. Then we came into the strategy. what I'm just going to show us right now, this is just a look into this. Maybe some of you are asking these questions, or you just shift. So when you look at this picture, okay, that is here right now, one of the things you're going to notice that from the diagram, okay, this is actually, okay, a bullish market structure. Okay, what makes it a bullish market structure? This is not a market it's not a market that looks like it's an established bullish market structure. Why? Because it has a strike, okay, then a higher low. So two higher low establishes a bullish market structure. So that is how you know this is a bullish market structure. It has a two higher low, okay, and a two higher highs, okay, two higher highs and two higher lows. That is when you have a bullish market structure. Same goes to what you need to, these are things you need to lock down, okay. It's not just about the shapes or the figures or how the chart looks. It's the characteristics, okay. You have to understand the characteristics. A bullish market structure is not a market that is going up, okay. A market that is going up right now can come down. What makes it a bullish structure? It means a foundation has been built. What is the structure of the foundation? It has a strike and a production of two higher highs and two higher lows. Same goes to a bearish market structure, but there's something unique about this knowledge that you guys have to pay. So in the training, I gave us details, okay. So it's not just knowing the structure, it's knowing it to the point of experiencing it. So at what point can I engage the market from the foundation, okay? So when you look at this structure as a bearish market structure, the first characteristic is the strike, a high and a low, okay? You write that down. A high and a low strikes the transaction. Then when the market creates a lower high and a lower low, it starts the formation. Okay, the moment it creates a lower low, it strikes the formation of because why? There has been a change. Another thing has been added. It has broken structure. There's been a break of structure. The moment it creates the second lower high, okay, a market has created. So one of the things you want to know, if you want to sell and you're looking for a bullish formation of a bearish market structure, if you want to sell, okay, you need to break of structure. So here you have one, here you have two. It means it has formed. So that's another simple way for you guys to know. For you to have a bullish market structure, all right, you need what? Break of structure, break of structure. The third leg is the distribution leg. That is the one that comes. That I told you guys. So for you to know bullish foundation and trading it, okay, you trade it from the standpoint of, has it formed? Has the foundation formed? Did you guys get this? Put 10 on the chat. I'm bringing new ways for you to get the light. Okay, there has to be two break of structure to form a foundation, whether a bearish and a bullish. So this is the first break of structure. This is the second break of structure. It means bullish market structure has been established. The third leg is what you're looking for. For what? Entry for distribution. Makes sense? Put sense on the chart. Okay, these are not the simple way for you guys to understand the foundation or the formation of a bullish market structure. This is different from when it's just forming. It has formed when there's two break of structure. Okay, so that goes for the bearish market structure. Now, this is what one thing, the break of structure. So there's one break of structure, there's two break of structure. It means this formation, okay, has been formed. It is complete. It has formed a bullish market structure. What a trader will be waiting for, okay, is distribution. All right, so the distribution phase is the entry phase. Anything before that time is you are anticipating the trade ahead. Okay, you are being your old new trade, your previous trader. All right, and I'm going to show us in the market. I'm just trying to take us through. So the same goes to, this is where the break of structure comes in. So break of structure helps you identify when the characteristics of the market has formed the foundation of the structure. So when it has break of structure, okay, so this is a strike. There is a lower high okay, and there is a break of structure introducing the formation. Okay, the second one establishes the formation, and the third leg is the distribution. All right. Now we're going to now move into another characteristics. So this is the bullish market structure, but the market is not all in black and white straightforward lines. So there are times where you could see the market in depth and you can see different characteristics. So these characteristics just show us, but it goes back to the basics. What is the basics? A bullish market structure is formed when there is two break of structure. Okay, so when you look at this market right now, this is a bullish market structure. This is a strike. This is a low. This is a break of structure. So all of this is what we call what? Internal structure. Because why? The break of anything before a break of structure, any formation or any structure inside of a structure without it broken is called internal structure. Now, these are just so you see the bigger picture. So what are really internal structure? There are times market, you won't see it clearly after the market has happened. So sometimes this thing you call internal structure may have created inside of it, there are times the market will create a high, a strike, a low, a break of structure, okay, a low, but not close that low like this one happened, close that low. All right, it's different. I'm going to show us the different phases, and we go up, okay, and inside of that break of structure, there's already a bearish market structure formed. So what is this for? Okay, over time, as you're growing, as you guys are growing in this course and in experience, you will notice something. Time frame. So you may be in a 1 hour, but inside of that 1 hour, there is a 15 minutes change of character. And it has sold in a 15 minutes, creating a bearish market, established a bearish market structure and it's creating. But it did not take away, okay, the low of that market. So if this was the low and all of these things happen, so let's say all of this is formed a bearish trend. So this, there's a break of structure here, there's a break of structure here, which means market has formed. This is actually a bearish market structure because there's a break of structure here and there's a break of structure here. So it has formed by, so if this market had come and didn't take this away and created a new low here, that's distribution, but it has not taken this away. So it means the market is still holding its higher low. So maybe now so this may be 15 minutes, maybe now in the hourly phase, it created a new and took up high. So inside of it, there was an internal sell. So what you use this for, when market does this nature, write this down. When market creates alternate structures inside of a chart or a time frame, and it doesn't establish or cut away the main frame, it's forming for a bigger time frame. When market wants to distribute in a bigger time frame, it forms internal. That's when you see internal structure. Okay, and I'm going to show us in the market. When you do your back testing, you're going to find out that it may be in an hour time frame, okay, and inside of it, the market has some internal structures. When they hold, you see the bigger time. It happened in GBP, JPY, it happened in gold, it happened in USD, JPY last week. Okay, and I'm going to show it, but I just wanted you guys to know. So internal structures expand the market. Okay, is the introduction to new structures on a lower time frame. And if the lower time frame does not configure to disrupt the main frame, what is the main frame of a bullish market structure? The strike that starts it. If that strike is not taking off, the market has not changed trend. So this is the strike. This is the high. This is a low. Okay, as long as market does not take this low away, all right, it has not attempted a reversal. It means the market is still bullish. But inside of it, there were attempted sells. So you watch out for the low, the structure. So there's a break of structure, there's a break of structure, bullish. This is just an activity inside of the smaller time frame. And when those activities are sustained, it means on a bigger scale, this market is preparing for a higher time frame distribution. Does this make sense? Put sense on the chart. Same goes to the bearish market structure. So the introduction or the presence of internal structures is expanding and testing the phase if that structure wants to hold for reversal. If it doesn't hold for reversal, then it's going to continue on the bigger time frame. So it's like shifting time frame Internal structures are those tests, okay, that shift the time frame from the time frame of analysis into bigger time frames. You see that clearly, as I'll show some phases, in main chart. So that is what when seeing structures, just know that activity sentiments are changing in between the days, but it's also not preparing us. So if you were selling and you've hit TP and now you're seeing the market coming back, you want to watch closely if it does not take away your previous low or your previous high. If it doesn't and it's forming and you see another break of structure, it means if you were on a 1 hour, 4 hour is preparing, the market is shifting into 4 hours. Okay, if that happened on a 4 hour and you're seeing 1 hour internal structure creating, it means, and it doesn't take it, all you just need to watch out if it doesn't take away the structures, if it doesn't take away the previous high or previous lows, you know that the next time frame is showing up. Does it make sense? So these are, but don't forget, this is one of the things I wanted to show you guys today. The formation, no matter what you build in the building, the foundation is key. Never forget the foundation when you're thinking of distribution. So a bullish market structure distributes in the third wave, okay? After it forms two waves. So if you look at this whole market now, no matter how wide they are just two, what? 1, 2, okay? This is the third wave for distribution. This is where I find my, after the second break of structure, okay, and it distributes back, that's when you're looking for your trade. So never forget that, whether in a market that has internal structure or in a market that doesn't have internal structure, that is always what you're looking for. The third wave is the wave of distribution, okay, but it happens after the bullish market structure is formed, okay. So another thing is now the name of the characteristics of the lows and the high, which brings us to swing lows and swing highs. Okay, so and like I told you guys, every low in a bullish market structure, a swing high is created after a break of structure. A swing high. Why? Because it was formed from a break of structure. After a break of structure and a low. So a swing low is that which forms a swing high. So, but this is how it's really used. If I am buying, okay, my swing high is created from a break of structure. If I am selling, my swing low is created from a break of structure. So the emphasis on a swing high or on a swing low is based on the direction of the market. So this is a swing high because why? There was a break of structure. This is a swing high because why? There was a break of structure. It is used majorly for the direction of the trend. So it's not labeling. You're not doing school where you have to label it. Okay. So this is a swing low. All right. This is a swing low. But in real time, the direction of the low and the high is based on the direction of the market. So if I'm buying, I'm looking for my swing highs. Okay, what I use my swing lows for is for the change. So no, this is my foundation. If the market takes away my swing low, that's reversal. Anytime the market takes away your swing low, that's reversal or change of character. It's not called break of structure. It's called what? Change of character and or reversal. You guys get that? So if the market is bullish and you have your swing low, if market takes away your swing low, it's called change of character. Okay. Why? If the market is bullish, if the market takes a previous high, it is called break of structure. So this is a break of structure because it was a previous high. And when there is a break of structure, it creates what? A swing high. So all of this is internal structure. So we have wave 1, wave 2, and wave 3 distribution. Okay. Same goes to what? The bearish market structure. So this is a swing. So you want to watch this. This is a low. This is a swing low. This isn't a swing low. This is a strike. So this is the first swing low because why? There's a break of structure. There's a break of structure. So this is what? Second swing low. And that is the second wave. This is what? Our distribution. Does that make sense? Is the emphasis. It's a swing for a sell. The emphasis for the waves is placed on the swing lows. For a buy, the emphasis on the wave is placed on what? The swing highs. Make sense? All right. Put sense on the chart. Are you guys getting this detail? Okay, good. So don't forget this. So now we come to a change of character. So, Kendra, what are change of character to identify your waves? So if the market, what I can change of character use? Because you are trading and you're tracking. So market structure is used to track the market based on exhaustion and limits. So you want to know when the market has exhausted. So if the market was bullish, you're tracking the bullish nature. If the bullish nature changes, you're tracking it. And how do you track it? If a bearish market structure is now forming, either on that time frame or on a smaller time frame, how do you track it? One of the measure of tracking is called change of character. So if the market was bullish and this is a swing low, okay, so this is a swing low because it performed what? A swing high. There was a change of character. So it's the swing low of the market. Why do you need it to be the emphasis? Because now you're looking at the market changing direction. So it is now the emphasis for what? Your waves. So when you see this market, this is your first strike. It changed character. So because market has changed character, you can now begin to look for what? Bearish market structure. Amen? Are you guys getting this? Put 10 on the chart. So whenever a change of character happens, two things. It's either it has formed bearish market structure on a smaller time frame or is about to now form bearish market structure. So that is when you can now begin to look for, not trade it, but look for. Okay, means market has exhausted the bullish momentum. It's not changing. And this is where you track it at premium and you look for sales. So that is what change of character is. Now that you guys have known what change, so one thing is to know about it, another thing is to know it, to use it. What I'm doing today now, I'm moving from just the about to the detail of usage, what they mean in the market. So when I see change of character, what do I do? Or Kenry, at what point do I know the market is going to sell? When the market starts changing character, you can now begin to look for bearish market structure. Then you can now begin to look for sell. At what point do you sell? When it has formed bearish structure. After change, there must be change of character. There must be the foundation of a bearish market structure form. How do you know a bearish market structure form? Two break of. You see two break of structure. Okay. On the sell side, it has formed. Many of you now think it's easy to understand from the way I'm telling you now. Okay. It's not easy to understand. So these are the guidelines for you to not take. Okay. So I'm selling when there is two break of structure. I'm buying when there's two break of structure. So if the market is been selling and I want to buy, I just have to wait for market showing me two break of structure. Then I wait for the third one. I can find my strategy in the third one. All right. So these are just little definition of the change of character. And whenever a change of character happens, okay, twice change to reversal. So this is just the definition. So this is a bullish market structure. The market is not always in waves like this that you just come and change character. It doesn't always happen like that. This is just a definition to show us. Okay, so at what point do you have a reversal? When the market has taken the first lower low. That's the first pillar. In a bullish market structure, when the market takes away the first structure, which is the higher low, that's what started the structure. It has reversed. Okay, it has reversed. Market has clicked reversal when it takes away the low. So this is a bullish market structure. So this bullish market structure will be formed. Why? Because there's two break of structure. Okay, so the moment this market distributed to take this out and take this out, so this has been taken out, there's been a reversal. Trend reversal. Okay, and if you look at that, a trend reversal accompanied by a change of character, market has moved. At this point in time, market, it doesn't take this high out, you will see a deep sell. Okay, but we don't trade trend reversal. We use them to identify when the market behavior. But if you are selling and market has successfully taken away your bullish trend, just know that you can keep holding to your swing. Okay, because why? All of the energies of the pillars of a buy has been taken out market, and we'll see it in you see it in GBP, JPY, USD, JPY. You just kept selling. Okay, so that is what you know. All right. At this point in time, this is when this is a breakout structure. This is a breakout structure. That is when you look out for a sell. So somewhere around here. So you can see this market kept going up. So this is one of the confusion of the market. Market has formed bearish market structure here. So you should be looking for a sell somewhere around here, but market broke above. And as it's broke above, it has formed an established bullish market structure. So at the point the market comes back into this area, you should be looking for a buy. This is what a lot of traders don't know. So this is twin reaction. It reacted for, it formed a bullish market structure and changed character and formed a bearish market structure. In the same vein, give back to another bullish market structure. This is where a lot of traders don't understand. It didn't get the distribution phase. It's just forming, but it's not distributed. There are yardsticks for distribution. That is where strategy comes in. Just because a market has formed doesn't mean you should just get in for a sell. Because why? For me to get in for a sell here, market has to come back in here and strike a place of shift. Now, when this market distributed this down, it has created imbalance. So most of the time, market can go back to that imbalance. And in that vein, it may have formed bullish market structure to go back to that imbalance. So all you have to do as a trader is observe the structure and wait for distribution. And that is where our risk comes in. We are not biased. And this is where the other things that I taught you guys in. The moment this market is going up, just check the market on the range. Is it on premium or is it on discount? Wherever the market is will tell you which one you should be sentimentally attached to. So if this, so let's say this is the market right now, and I'm looking for a sell. Based off on the range of this market, I will know if a sell is what I should focus on, or I will not, like a prostitute, just follow this bullish market structure when it comes here. Okay, so if this comes here right now and hits a structure, I can buy. Why? It has formed a bullish market structure. But what is the other yardstick to bind my buy? Is it on discount on the range? This makes sense? Okay, because that is what will kill your confusion. Because many people say, okay, that's one bullish market, should I enter? What is the range and what is the liquidity provider? Is it on premium or is on discount? That is not going to tell you how decisive you should look at your trade. Okay, if a market is on premium, look for sells. If a market is on discount, look for buys. So irrespective of market structure, just stick to what premium and discount and your range. Amen. Are you guys with me? I'm just giving you guys trading establishing nuggets. Don't if you can stick to these things in your own experience, you're going to find wisdom in the market. All right. So this is we share what a shift is. So this is what brings us into a strategy, a market structure shift. A shift is the leg that actually takes away. A shift is the leg that creates a change of character. Okay. So, and from a shift, we now see the strategy formation falling in place. So this is a bearish market structure. This is a shift leg. Okay, a shift is the leg that takes away the previous swing low. So this is a swing low, which is the pillar of the formation of the bearish trend. It takes it away, and the next thing it comes back to an imbalance, creates the second structure. So a shift is that leg that forms the next wave. So, but it's not necessarily the buy leg, but most traders anticipate the trade. That's why we have two strategy. But I also give us a formation, and that moves us to what we now had on the two strategies. Okay, the formation. So you will find out that the shift will be faster than the market structure shift strategy is faster than the shift strategy. The shift strategy is based on total formation, but market structure shift isn't based on total formation. It's an anticipated. So sometimes there can be a distribution like this. The market was bullish and it distributed back. This is the shift leg. So the shift leg is that which takes away the swing low. So that shifted. The next thing, market can come to an imbalance, take it. So let's say the imbalance is around here, take it. It's gone. So you trade the second wave. Sometimes you can be lucky. Most of the time, when you follow a shift, over 60-70%, you definitely get it right. Okay. But most times, it's like you're swimming in a well. It could be better because if a shift is going to form, for the market to distribute, it will form. So why not just wait for the form? Okay. But you know one thing about trading, sometimes the fast entries are the best entries, but they are not the most protected entries. Are you guys hear what I'm saying? The fast entries are the best entries. They are more profitable, but they are not more. So between profitability and protection, which do you choose? It's a choice of a trader. Over time, long-term traders try to be more protected than profitable, because the profitable way is also what the losing way. Are you guys following? So it can be profitable, but you lose more in profitability. But when you follow protection, protecting your trade, protecting your equity or your capital, you find out that following market structure protects you more. It may not be more profitable, okay, but you find out that you're more protected. So that is the whole idea of market structure, being protected. That's the whole idea of the shift strategy compared to the market structure shift strategy. And I did something unique within the course. I didn't just show you the market structure. I also give you guys, okay, so what you can do is allow it to form. Most of the time, if a market sheet, so let me give us a yardstick, okay? I gave us a kind of like a checklist. So this is the shift leg. The moment it shifts, it has taken this. It's going to find a trade around the imbalance. That's wave 2, okay? Then after wave 2, it's likely on a smaller time frame. So Cambridge, I can delve into this quickly right now. So I did this, I took care of this in the last class, okay, where you begin to find the market structure sheet. So when you see this right now, so this was a bearish market structure. This was a shift, but look at what happened. This is one wave, this is two wave, this is going to be the third wave. What is the third wave? Okay, you see this right now. So there is a break of structure, there's a break of structure, that's bullish market structure. So the third wave, which happened to be on top of this or an imbalance in this, is going to create a third wave. So after the shift, wait for a third wave. You're still trading the market structure shift, but this time around, you're trading it on based on the yardstick of what? Let the market be formed for me to trade the market structure shift. Does that make sense? Okay, so either way you win. So same goes to what? Bearish. So this is the shift break of structure. Okay, this is the shift break of structure, market structure form. All you need to do is what? Either wait for the market to go back to an imbalance and you take your trade. Okay, or you wait for the market to. So this is actually the shift neck, because the neck after the raid, for a bullish market, the floor after the raid is actually the neck of the market. If it breaks retest, that's a fast entry, that's a shift entry. You take that. It may go back into the imbalance. That gives you a second trade. And why these things are good, ladies and gentlemen, is I'll stop here to share this simple thing. Trading is not more about entry, but more about managing. Okay. So every wave has a timeline. If you notice this week, there was a wave in one direction. But the question is, how many people do catch the wave? So sometimes it creates an opportunity for entries. How many entries you could catch is based on how many variation you know. So some of you may be looking for just the shift, but market will just do market structure shift. Sometimes market may not even do both, may just do change of character shift. It just changed character and it's moved. Okay. You would only see that it has formed and it keeps moving. I'm going to show us data, but not at your entry point. It went to daily. So in the 1 hour, you were looking for two formation, but it didn't give you 1 hour. That one day was just a shift leg. Okay. And it kept going down. And it kept going down. But you look at the market 2 weeks later, in the daily or the weekly, it has formed bearish market structure shift and it was selling, but you couldn't enter. You guys get what I'm saying? But you didn't get an entry on the hourly, neither on the 4 hour. Because why? Time frame. The force of distribution was so much, mostly when market has, that's why you saw it happen in GBP, JPY, and happen in USD, JPY. Market sold 800 pips. Why did it sell? I've been telling you over the weeks that when this market will sell crazy. Why? It overexhausted. So the same way it goes up, when it's coming down, it's like the law of gravity. It will pull it down, because why? Everything that was pushing that market was not natural. Okay, everything that was pushing the price was not natural, so it may not follow the basis of market structure on your terms. It just drops. And a lot of people missed entry. This is where different variations of entry comes in. Sometimes there are strategies I'm going to start teaching, which is the shock strategy and the arc strategy, arc shift, the shift shock and the arc shift. Because why? A market may just consolidate after it has raided and okay, and after the consolidation, break gone. It happened. I saw it this week, and it's gone. But it did not form the structure well before it fell. But there was another way you could have entered, either through the shock and through the arc. Those are the two next one I'm going to be teaching within the classes for those people that are members, so that you guys have the different variation to build market structure and have different entries, because patience is a virtue, but every virtue has a price value. If you don't pay yourself based on your patience, you may actually sell yourself out. That's why a lot of people get into a position they are not supposed to get in. The goal is for every wave, know when to get in. Don't be stiff, because if you're stiff, you may miss. And you may not have the patience to wait for the next wave. It may take another 1 or 2 weeks. And you'll be frustrated that you've not made money over the last 2 weeks. And that's why a lot of traders step into learning many things to just stick to knowing different variation for the same purpose. Does that make sense? Put sense on the chart. So I'm just going to share. Let's take a look at what has happened in the market. Situation, or I want to position, and I'll just run over. Okay, good. So we look at this market right now. This is gold. So what happened in gold? Okay, so I gave you guys gold. So on a smaller time frame, okay, this is the May sell side liquidity. But you see, on a smaller time frame, there is a change of character. Our market created this, okay? And guess what? After this is one wave, which is what? The shift wave, which is the market structure shift wave. This is a fair value gap. And it's so this is where this is the only time I got good. Okay. I was waiting for another entry here, which I gave. Market attempted it, but I missed it. I set an alarm, it didn't hit, and went down. So what do we have? There's a break of structure, okay, and there's a break of structure. So this is what a lot of people don't know. In a bigger time frame, this market has formed a bearish market structure, and if that happens, going to happen? The third wave. So where is going to be the third wave? So there are a lot of distribution points here. There is imbalance. There are imbalance level here. Okay. And now in a bigger time frame, let me show you guys something. There's a break of structure here, and there is a break of structure here. It has happened. But where is the first shift of this leg? Yeah. So market may come all the way here to give us what? Our trade, and drop down. And what would that be? To disappoint you. Third wave. Why? This is the first wave. This is the second wave. And this is going to be the third wave. It may take away this high, but that still gives us what? 1, 2, somewhere around here, which is the shift leg, is going to be the third one. And hence, you would have thought, oh, the market is going to sell from here, but market may go all the way up here. And what that happened? It has formed bullish market structure. But don't forget the range. Okay, what is the range of this market? Here and here. So it's either the market sells here to give me my third. So I'm not too particular about this distribution now. I'll be particular about my entry. My entry is always at the range point. Since this market left me here, didn't come back to retest here, okay, missed this. This is the second point, because why? That's another range. So always pay attention to your range analysis, not what the structures are doing in between. Are you guys getting what I'm saying? Okay. The main important thing is your range analysis. So I know that. What's happening? Sorry. Wait, hold on, guys. I think you guys are trying to tell me something. Okay, I muted everyone. What was it? I'm not looking at the chat.
Screen not showing. Screen not showing.
Oh,
screen has not been showing.
Wow. Thank you. Okay, what was I sharing? What was I sharing? What was I sharing? What was I sharing? I was sharing application window. Oh, Is it showing now?
Yes.
It's showing? Okay, all right. Okay, so I talked about gold. All right, this was very important. So you can see I did a lot of analysis on gold because that's what a trader does. I was looking for market to come to this point. Why this point? Because this is a premium of this range. Since market is below, this is a premium of this range. So irrespective of what the structure is doing now, so this market right now on a bigger scale, it has broken structure one, it has broken structure two, which is change of, it has broken structure. It means it has formed a bearish market structure. Okay, and some people say, okay, it will start selling here. The question you want to ask is, that sell you're looking for here, on the range you are trading, where is it? Is it on premium or is it on discount? If I am selling around here on this range, yes, it's still on premium, but it's far gone in premium. So which means, fine, if a trade comes here, this week if the market opens, I'm going to be looking for a trade. I'll get an entry here, put a stop loss here. Okay, because why? That is still on premium. Yeah, somewhere around there, still on premium. It's very, very premium. But better trades may come. Now, when you look at this trade, there are, if I shift to the 4 hours, so let me do a little bit of this on another gold. So you guys study this formation. So the market that are distributed. So you guys watch out for something. Let me take this out, everything out. So this is distribution. Can you see 4 hours? What do you see? It's cleaner on 4 hours. So this is a wave that brought it back, came here, brought it back. So there is a change of character, first change of character, okay? And so this is actually what our second change of character. So normally what market can do is I can come here, okay, to create a third wave, which means it's going to be 1, okay, 2, and 3. Okay, neglecting this, but now I'll tell you, I'll shock you. Okay, when market can pull up here and activate this. Why? After the change of character, it has not blocked all of the imbalance. There are so many imbalances on the market. So there is an imbalance here. There's an imbalance here. There's even an, okay, well, it has taken this imbalance. So there is liquidity here, there's liquidity here. And if the market comes here, what do you see? It means all of this is internal structure. I told you guys what happens when the market is creating internal structure. So internal structure can be leads to bigger time frame. So imagine this market comes here, what do you have? This is 1, this is 2, and this is going to be the third. Distribution happens and everything clicks. Why? Because this is what? Prime. Look at this. All right. You're going to find out that you find good trades there because why? That is a sense of liquidity. And you sell all the way here because why? That liquidity has been activated for real. Okay. And when it breaks below this and comes back in here, you can now sell this liquidity, which means you have, that's another entry. You sell here and it comes probably come here again. That's another sell because now you're selling this liquidity to exit here. Are you guys following what I'm saying? Okay. You're following what I'm saying? So don't forget this trade. Don't get carried away. So when this market opens next week, I'm still going to trade here. But in case it's going up, because on the 4 hour, it's not creating bullish market structure already, but on the 15 minutes, it is. So if it comes here, good trade. There's so much force here. There's a sell point here. There's a sell point here. So market can come here and sell. Okay. So that is a good sell to anticipate a third wave from here because there's an imbalance and the market is still on premium on this level. But if it's on this level right now, the market is not, if it's for this range, market is not on premium, it's on discount. Okay. So what I have to look out for is I can take an entry here, okay, and also anticipate an entry here. Either way, gold is on a bearish market structure, either for this liquidity or it's going to go for this liquidity. Not until the market gets here, it's not fully done. Does that make sense? So this is gold. Another one you guys saw that happened last week was US DJPY. Man, guys sold well. Beautiful, right? It distributed. Okay. So market distributed. Let's look at the distribution. So this is the first high, this is the second high. Okay. And market left a very beautiful gap. So whilst you guys are thinking, oh, this market has gone, it has not really played out the range because the way we would have expected, because after a gap, there's always a mitigation. So there's a huge mitigation point. So one of the things I see is I still see a sell. Okay, if market comes here, there's a major sell, and that's going to give me more money. So if this happens, oh boy, it means all of these are internal structure. And when this happens and establishes and come down, oh boy, this is going to not only do this, you will see a major heartbeat on, where is daily? It means it's activating for it to pull this down. What is this? Why is this market here? Let's go to weekly. Oh, the market has been in the past. Wow. Oh, boy. I was thinking market is in an all-time high. Market is joking. Okay, so you can see, oh boy, no wonder so many liquidity points. Oh, no wonder this market was dragging up. So now it has activated a strong liquidity point. So you can see this right now. This is a liquidity point. This is a liquidity on the monthly. So if this market is coming down, you have ranges of sell. So this is the next range for sell. Let me just, on the monthly, let me just identify that right now. Oh, wow, I've not really looked at this market the way it is, the way I'm seeing it, the way it is right now. Okay, this is what I just marked, right? Okay, good. So for this market to pull down, so look at this market from a weekly perspective. This is a raid, didn't complete. Then it created this, came all the way. It's trying to come down. What do you think is going to happen? This market is going to sell down, okay? Come into somewhere around here and drop. If that happens, you're selling this market down. Imagine you are looking for an entry here to this area. What do you see here? 3,400 pips. It's not small traders who are looking for hourly trades that will see this. Okay, because if this market breaks into this arena right now, trust me, it's going to come back here, then fall down. Okay, it means it's going to use these areas to sell. It's trying to get into this area. So it's either the market continue up, or if it breaks into this area, okay, it's going to sell down. Hence, we'll be looking at this range, very clear range in sight. Okay, so, and that is, you can see, market is about the chase of liquidity. That's why I taught you guys liquidity. When you look at this chart right now, what do you see? Okay, liquidity. You guys can actually go to this indicator. It's an indicator for you guys to know imbalance, different imbalances in the market, for you to know where there are fair value gaps. Okay, imbalance indicator. Where is the name? Oh God, why is my chart not fully showing? Okay, imbalance zone. Okay, just go to imbalance zone. You see that this is it. Okay, imbalance zone. Just type it on the indicator. Just activate it. It will help you see the different imbalance on the different time frame. So you can see a lot of liquidity. Every imbalance is a liquidity point. Okay, it means that was where there was a drive of liquidity. Our market left. It has not come back. So there was so much liquidity left in the market. So you can see so much liquidity. It means the pool downstairs is competing. So there are 3 pools here, but you can see multiple pools: 1, 2, 3, 4, 5, 6. Where's the market going to go? Market is always chasing liquidity. So there's every possibility the market is going to drive down over the next couple of weeks to come and grab all of this liquidity. All you need to do is what? If you're on a weekly basis, you just have to look for what? Weekly or daily bearish structure. Right now, it's just 1 sell. If it comes back in, that's going to be 2. And that 2 may bring it down, change of what? Break of structure. If it comes back into the 3rd one, somewhere around here, it's going to be highly premium. You can set your trade, put your lot size, put your TP here, enter 5 entries, begin to take profit in each of them, set profit every 50 pips, because you know one thing that will happen. It's going to drop down here over the next couple of weeks. That is taking position. That's maximizing every opportunity based off on range and liquidity. Does this make sense? Okay, so this is USD JPY. So on a bigger scale, it's just started. But if you see it on a smaller scale, it has done market structure on a smaller time. So you say, okay, Camry, this was wave 1, this was wave 2, and it did wave 3 here without coming here. So it moved. So this is the kind of move I call change of character move. It changed character, dropped, and dropped over how many pips? Crazy. Stole all the market. Like this is crazy. 800, 907, almost 1,000 pips. Okay, without giving a proper 4 hour this is 900. I'll tell you, if it did 900, without establishing a 4-hour structure. What do you think the trade is preparing for? Okay, that's why it's preparing for a bigger move, because if this market comes back and forms a 4-hour and a daily structure, it's going to go thousands of pips. Crazy. You know, I see opportunities when I know them. Not I know opportunities when I see them. All right. So that is, so GU, I think we have distribution on GU as well. G is also forming. So I'm going to, what do you have on GU? One wave. So on a smaller time frame. So you guys, why am I showing you guys this? Identify opportunities. So market is moving. So market distributed without properly forming. So if you look at this market, this is all consolidation. Market was supposed to come here for me to get what? My second wave, or come here for me to get my second wave, then come again. So market is creating all internal structure, and I'm seeing a bigger move ahead. You know, this election period, I think maybe this whole thing is happening because there's a big move that's going to happen in the forex market that a lot of people are not prepared for. I just hope some of you are. Okay, because why? Everything that is happening here is not ready. This market is not ready for a sale yet. Okay, the market comes here or comes here, that's when I'm going to be selling position. Because why? There's a bigger range here. There's a range here. Okay, and I know that range is not yet. It's not yet. Since there's a range, where is it? Okay, good. So there's a range here, and that range is almost, you think, oh, it's almost hitting the range, it's almost covered. No, a range is not covered until bearish market. Every distribution that distributes, if it is not instigated by bearish market structure, then that range is a virgin. It doesn't matter how far the market goes. This range at the moment, okay, this is a range of a market. That range is not covered. Forget if the market even come here and touch here. Doesn't mean it has covered the range. Because for me to get that range, it has to form bearish market. Any distribution in the market that is not orchestrated from the foundation of bearish market structure is a pending, it's a liable distribution that will happen again. So always wait out for your range. So I know if market comes into this area again, I am going to sell here. That's why I did this. So if this market activates this area, I'm going to sell all the way here. So I'm going to sell from here to this area if a bearish market structure forms. So this is all in one wave. It may come again, doom. It may come again. The third one, I'm going to sell. No, it doesn't matter how long it takes. I will sell. And when I sell that, I'll take profit. Then I'll wait out for what? This next range, or this one, or this one. This is the biggest of them all. Oh boy, so much money. Oh boy. So I'm just looking out for that. So when you see market that are choppy like this, just know that the market is not ready. Wait out for what? The bearish structure to form. So that's why I gave this trade last week. I'm looking at market coming back here. There are gaps. So you can see that there are gaps, there are gaps, there are gaps. See, that's going to come here. If it doesn't, I will sell here. Okay. If it comes here, I'll sell. Fine. And that's going to be just even the second one. But that second one will be fine, because if it sells here, after it change character, it has to come to a gap. That will be fine for me. Okay. I can sell that. Okay. Or it comes back all the way to the shift and I can sell it. You guys go what I'm saying? So that is about, I just wanted to show you guys the relationship of the strategy, likewise knowing the range. So if this market comes here, just imagine this market comes here right now, there's a range. I can buy when I see bullish markets. Why am I buying? I can buy to sell, because why? There's a sell waiting for me. And for me to go meet the sell, if bullish market structure forms, I can buy. Why? There's a range of a buy here. So this is how you guys can track your market and begin to make profits, okay, from following, knowing that you know what you're trading rather than just trading, okay, because you see opportunities. Did you guys get something new today? Any questions so far? Put 100 if you got something new today. So my whole aim is, while you guys get into this journey, whether you want to do it personally, I have been able to show you the about. Okay, your personal relationship with the market is now how you take out time to document your trade, study your entries, see your relationship with your executions. See it over time. Okay, see it over time. And as you practice, come back to see if that what you did is what you learned. Because there's one thing about execution that is based on what you know, okay, than what you have learned. Always check what I did. Is it based on what I have been taught? That is how to follow information. And when you follow it long and closely enough, you're going to be a product of that which is learned. And that is really, truly when you learn. Okay. But it's easier when you stay close. It is hard to be alone as a trader. I promise you. Okay. It is very, very hard because why? Many people are watching for results. No, your result comes when you learn, and you have to stay in an environment where you keep learning because as you keep learning, something happens to you. Okay. Your mind is designed to retain information as long as it is consistent. So, but when you take yourself off and you're trying to master one, you are static. So every time I'm open to learning, but even as big as I am in known, I'm still open to learning. Okay. And I do not tie what